Hi, and good evening to everyone, and good afternoon or good morning in case you're somewhere else. We are here to dissect the Union Budget 2022. This is an interesting budget exercise, which is the second one in the middle of a pandemic, and the pandemic is still on. The first one was in February of 2020, and the pandemic started after that. The second one was in the thick of it in 2020, then 2021, and now we are in 2022, second year of pandemic. The reason I'm saying this is one did not quite feel that there was a pandemic all around. If you heard the budget speech today, there were some references to it, but not the kind of reference that maybe someone like me would have liked to see, particularly if I was looking for contingency plans and a thought process which looked at merging the challenges of health and economics, or the economy as a whole. So that is a very, very broad sense, but there were a lot of interesting and maybe good things, and some may be good. But as I've felt right through this speech, a lot of the budget is about what was unsaid rather than what was said. So, but maybe that's a new way of presenting a budget and a new strategy. So, what we're going to do this evening is we're going to talk to three people from slightly different perspectives and get a sense on what they see from a capital market and in investments point of view, from a finance and personal finance point of view, and finally, and most importantly, perhaps tax, considering that there were some very interesting tax announcements, including the one on crypto, on which I've again picked up some interesting insights in my own conversations with tax experts this evening. But we'll come to that later as this evening progresses, and I progress it will. So let me begin by first, Girish, welcome, and very quickly, your one or two line takeaways, and maybe a batsman or a bowler that you think would best describe Nirmala Sitharaman today.
I think from a tax standpoint, very, very stable budget. No surprises, no new taxes, no googlies actually. It's absolutely stable. So it just shows that the policies are very stable. And a lot of rationalization on the various contradictions in the tax laws, where there are case laws on two fronts opposite one another, a lot of logical rationalizations. So from a tax point, very, very stable budget. No surprises at all. Yes, there are misses in it, which we'll come across when
Yeah.
we go through the
Yeah.
thing. But overall, very happy as a tax professional.
Okay. No, any name, any batsman, bowlers?
I think I would say it's Rahul Dravid, yeah, as
Again,
stable as it
okay.
is.
He's like I think he seems to be a gold standard for when it comes to stability. Okay. Girish, if you were to now deep dive, what would you first pick on?
I would actually first pick on the changes which we don't talk about. And if you look at the corporates, there is a big thing saying that there is no change in corporate tax rates, everything is the same. Yes, there are extensions of tax holidays. This 15% new manufacturing tax holiday has got extended by a year. Startup has got extended by a year. But there are two, three things which are actually takeaways from the corporates. The first thing is foreign dividends will now be taxable. They had a concessional rate of 15%. Now onwards, they will have to pay tax at the regular rate of dividends. Of course, there's a ATM concession. So anybody wanting to get money from the overseas subsidiaries should get it before March end. Otherwise, they will be having a higher tax rate. And there are two other big changes which are there, which impact companies. There was a big debate that whether cess and surcharge was deductible. Many people had taken a view that cess and surcharge are deductible expenditure, and they had revised their returns based on case laws. There's a clarification which goes back to 2005-6, which says that this is not deductible. So this is going to trigger a lot of demand for people who went ahead and took those aggressive positions. And the third and the most important thing is that, if something is not lawful and if you paid that person that amount, then that expenditure is also not deductible. For example, I'll give you an example. Take an example of a doctor. A doctor cannot take a holiday from a pharma company. A doctor cannot, take any benefit from a diagnostic company. So you see doctors going overseas for travels and seminars and all on the cost of the pharma company. That is the lawful expenditure by the company, unlawful expenditure. So that is going to be disallowed. So in a lot of industries where they were claiming these kind of expenses, the disallowances would happen. So there are things in the budget which may alter tax positions of some people, which I think we don't talk about, but that's there in the budget. And this bonus stripping also is a very important thing. It's not just plain bonus stripping. Bonus stripping, look at it from a perspective of startups. They do bonuses, and some people do secondaries in startups just before the IPO. They do bonuses to make the IPOs happen. Then for 9 months, you can't sell it. Otherwise, you will have a problem from the bonus stripping perspective. So it has cascading effects, not just simple bonus stripping for tax plan.
So your focus is mostly direct tax, Girish, if I
Or
understand.
both. And GST, I think GST also is GST. There are not too many things to be spoken about because GST is outside the budget. They just spoke celebratory that GST rates collections have been high, and customs there's a taper downwards as you see that they want to move towards a rate of 7.5 without too many concessions.
Right. Okay. So let me pick up a couple of questions to keep the conversation going. Suketu Lalvani asks, and Girish, this you could pick up. Did the government miss an opportunity, I assume, to iron out taxation issues to enable access to global bond indices? We could have got substantial money from the same.
Answer is yes. There has been no extension of the interest deductibility, and there is a cap on the interest also in that period. Yes, we have not got any changes on that front, but I was not expecting personally because there is so much liquidity in the system at this point of time that through for them to give this concession perennially for the last 10 years they've been giving it. How much would they further give it? I was not very sure as a tax professional.
Girish, the long-term capital gains. I mean, the announcement seems pretty simple that the surcharge has been capped at 15% on financial assets. If you could tell us what are the conditions around in which this is applicable or not applicable, what should we be careful about in interpreting anything, if so?
Yeah, it's a very important amendment. If you were selling a house, if you were selling shares of unlisted companies, hold on till April. If you sold it now, you will pay tax at a rate of 28.5%.
Hmm.
Whereas if you sold it post April, then the rate goes down to 23.92%. So any long-term capital gains tax on a capital asset, which is other than a listed security, today the rate is 20 plus surcharge, effectively can go up to 28.5, and it should be changed to 20 plus surcharge plus cess and other stuff, which makes it 23.92. So I see postponement of deal closures to next year
So,
because
but this does not include listed stocks, you said.
listed stock anyway is 12%. So that
Not
anyway,
one year.
yeah.
Hmm.
So that anyway is the concessional rate. So
Right.
that's not a
And
problem.
what's the thinking behind this?
The thinking behind this, there was a big representation with the startup community made. So the government had met the startup community. They told them that they have to pay 20.5%. It's not fair for them to pay a surcharge of 42%, whereas for listed stock, the surcharge was capped at 2%, 10 on to 23% effectively. So based on that, there was a year which the finance ministry had, and I'm glad they did it. Because what is happening in startups is at the second or third round of funding, Govind, people are encashing some things for themselves. And then the tax burden is 20.5 is huge money. So it's a big
Understood.
benefit to them.
Understood. How competitive are we from a tax point of view? I mean, both two things. I mean, one is what we face individually as companies, as well as from a tax administration point of view. And has this budget done anything in that regard?
So from a rate standpoint, we are very competitive, whether it's individual or whether it's corporate. So if you look at UK, you look at US, our rates are comparable to any other mature country in the world. There's no problem. Where we have a problem is the execution of our initiative. So like a faceless assessment till it becomes really stable, it takes time and harassment happens. Or even the dispute resolution or the litigations and the various things. There is one indirect VDIS scheme in the budget. And I would say it's a VDIS scheme because if you've forgotten to put something or you've taken an aggressive position, you can revise that position 2 years after your assessment year. And you have a penalty of 25% for 1 year and 50% for the second year. Now, that's a VDIS actually, because you have an opportunity to get away without penalty. The
Is there any limit on the scale of or any company can a company also do that?
Anybody can do that.
Individual.
The only thing you can't be in a search case. You don't need to have a reassessment open done. But if you have some worms, you can actually clean it up in this whole thing. Our execution is a problem because the initiatives are good, but the interpretation of that creates problems. That's
Right.
where we're not globally competitive.
Okay. And if you were to now look at it in the context of people who are, today's this evening's audience is largely about investing, looking for opportunities and so on. So would you want to address it from that point of view?
I would think the rumors. I'll tell you. I used to get calls 2 3 weeks into the budget. Will the capital gains tax go up? Will there be inheritance tax? All the wealth managers were busy running around making trusts. So the fears on bad news has gone away, and markets like certainty. So that uncertainty part of the budget spooking the market has gone away. Now, clearly, all the eyes will now be on the, as Deepak said, US Fed, US taper, interest rate height, 4, 5, how many will India do? Till that stabilizes, I think again, that's another conversation we'll have. And the elections in these states. So I think the budget tax fears now are behind us. We will not speak about it very often in the next few days.
Right. But as Deepak reminded us, the corporate tax reduction happened off budget.
Yeah, but
Good
now
news, of
when
course, but
yeah,
bad news could come similarly, couldn't it?
unlikely because there's a LIC IPO happening. There's a Air India
Right.
celebration which is on the card, and by and large, look at the GST collection. It is awesome. I mean, with the Omicron now taking a backseat once again, I think things should really load back. The change that happened. Section 68 has made that provision happen. Again, as I told you, the intent is right. I mean, it's not for the black money to come into companies,
Hmm.
but just to penalize all, assuming that they all would be doing it, is ridiculous. So I agree with him that that's again what I meant. The intent is there, but it just consequences are very dramatic.
I mean, angel tax too was fine if it was used
Yeah,
as an
yeah,
exception, but it became the rule. Anyone
yeah.
who, or almost anyone who got money had to show that it was, from someone legitimate and go and get their income tax returns,
Correct, correct,
exactly like it is in this case. Okay,
correct.
okay. So on the tax front, I think there are still some ways to go. As we head to a close in the next a few minutes, let me get a sum up from takeaways.
My takeaway is that I was very happy with it. No changes, not too much running around trying to interpret ridiculous things. There is a lot of cleaning up which is there, and the devil is in the details, as I spoke to you about for cess and surcharge and like Section 68 amendment, which Deepak spoke about. But overall, very, very good. But what I'm expecting is, I think there are a lot of policy initiatives which the government has to do, which is not covered in the budget, not supposed to be covered in the budget, whether it's a cross-border merger, SPAC, international fundraising, so on and so forth, which is very good for the ecosystem of raising money. And I think that reform process should continue in the next few days as we look.
Girish, just one quick thing. The minister referred to, winding up companies and using IT-based systems and so on. So that seems to be, I don't know if you've studied that more carefully. It seems to be a
Within
good
six
thing.
months, they are saying that they will close companies up, so we don't need to go through big, lengthy processes.
Hmm.
So a lot of people who have many, many interlock companies, holding companies, they can wind it up and clean up their structures, and that's a very good thing. But let's see how it's executed again. So comes back to execution.
Okay, and even I don't know if you would like to stick your neck out, but do you have any investment themes in general or specific?
Investment things, I think, as I see my clients, as I see people around me who invest, I think manufacturing is looking very, very good. It just seems that the capex cycle will revive, and manufacturing is looking very, very good across. So I think, and that's why if you look at the metals and all, they all went up, hoping that infra spends would happen and different kinds of investments would happen. That's looking very, very good. So
Okay,
for
so
once, Bangalore is looking different because Bangalore is a unicorn place with SaaS. It's looking very different for Bangalore versus manufacturing. And I think the biggest miss, I just speak about one miss,
sure.
which I was anticipating for Bangalore and Delhi actually, was this ESOP taxation. That's a painful thing. That should have happened. That's not fair actually, Govind. That's not fair. Because the point of taxation should be deferred to the point of sale and not, in the interim. This is the real hardship which should have been taken care of. I hope somebody makes representation. So when the finance bill is passed, this is one change which we
It's
should
an
push.
important note to end on, but in a sense, an important input into entrepreneurship and encouraging entrepreneurs to not just set up but also to distribute their the wealth creation opportunities. Vanvari, thank you so much. Also setting the stage for coming months of good investing and wealth creation for everyone. I guess. Thank you so much.
Bye.
Thank
All
you.
the best.